Hey, welcome back, everybody. After a long weekend, we are back at it today, and we're starting with our pre-market prep. Hopefully, everybody had a great long weekend and got some rest and are ready to get back at it. I know I am, and nothing's really changed as far as our bias and what we see in the markets. But I'm actually going to talk about here today how to handle the emotions of current events when you're trading stocks. And as I always say, it starts right here with your pre-market prep, and that's you know have to have a good understanding of what I see in the markets. But the current events and things that happen in the world and what's going on affects the stock market. The stock market makes moves up, down, sideways, right ways, squigglies, whatever way it's going to go. It's going to do what it's going to do, and it affects you emotionally. I know for me it does. As an older trader, who's rather risk adverse, I look for high probability setups, but at the same time, looking to pull money out of the stock market from time to time. So I trade my own money, so I lose my own money. So let's get into a little bit of housekeeping. I'm not a financial advisor, nor do I give financial advice. These videos are all part of my trade journal and my trade journey. I record these because as I talk through these setups and as I talk through this process, I see things that maybe I normally would not necessarily always see, but it also holds me accountable to my trade plan, to what I see happening, and looking for entry points and exit points, and setting things up for the day to get my mind straight for the markets. Stocks and options have risk, and they are not suitable for everyone. And make sure you understand the risks before you enter into any type of an investment program. Um, on top of that, trade your own money. You lose your own money, and you can make some money, but you can lose every penny of the money that you put into the stock market. And remember, cash is a position. So let's get into the emotions of current events. So Friday we had the jobs reports. We had all these type of things that go on all the time. The Fed has meetings all the time, and a lot of times the market will pause and it'll wait for that announcement. Well, as we look at the markets here today, they've kind of, they've been paused. They have not been making any big moves. They've been kind of consolidating, setting some new highs along the way, but at the same time, not any major moves from that standpoint. So, with that being said, let's jump into our first chart and let's talk about the Dow. So we got the YM here, the mini Dow, and as always, the long-term chart. And we can see here on our weekly chart, we had this pullback here about a couple months ago, and we've been just kind of chopping along here, going a little higher. But for the last few weeks, 4 or 5 weeks here, we've been kind of stuck here, range bound, just below the 35,500, and so we're just sitting here just below that line. Holding 35.4, roughly right in that neighborhood, holding that 35.4, 35.3, right in there as support. And so we'll see if we can begin to push a little higher. We've been in a weekly squeeze. All the indicators are kind of indicating kind of flat. Our Keltner channels are coming, kind of pointing in here. So, which means, tightening of the range here as far as the ATR, the daily range, the weekly range and the daily range. Same thing here on our daily chart. You can see that, this 35,550 roughly has been acting as resistance, and we're just not able to break out. We just don't have the momentum. We are in a daily squeeze. We need to break, the Dow needs to break that, basically 3550, and before we probably start seeing some movement in the Dow. So it needs to break that and hold that as support. It is a key level, psychological level. And so we on our way to, 36,000. So So, we'll see if we can get some momentum, but I don't know if it'll happen today. By the looks of things, I don't think so. It just doesn't seem to be. The markets are rather mixed. Just not really sure what direction they're going to go with here today at the open. Let's take a look at the Russell here. And the Russell has been really on a nice move that we called here after this double bottom, and we popped up here. We were looking for the rejection right here. We got a pop up a couple Fridays ago and had a nice move up. Now we've had this little bit of a pullback here. It's indicating, opening up just a little bit lower. Indicators here on our TTM squeeze, we should be running into exhaustion, so we should probably see a pullback here. It is rather extended from the mean, the 21 here, so I would probably recommend that we're going to probably see the Russell pullback, I think. So small caps, but again, in this market right now with the bond rate rising and inflation fears and possibly the Fed tapering here in the next month or two, small caps might become kind of interesting. And so we'll see what can happen with that. So we'll be watching this here. Right now, I'm not looking at, I know I wouldn't be looking at shorting this or even playing this to the upside here. So, this will be something that we'll kind of keep our eye on here a little bit. But, the RAF is showing that, we could be reaching a level of exhaustion here. So this is probably going to pull back before we see the uptrend continue, as it may be setting up for a reversal. Right here, let's jump into the VIX here this morning. And the VIX is popping up here a little bit. It's at about 17.2, and so it closed out on Friday, in the low 16s, mid 16s, and so it's kind of popped up here a little bit. So a little bit of volatility creeping in. We back out of this here. We can see here that we've got, we've had some pretty big spikes, but they're very short lived. But if we get over this 20 line, we are definitely going to be looking for some, buy the dip opportunities here. Right now, there's, whether or not we're going to get that kind of pop here today, I don't know. The RAF is giving us a ready aim fire, or it's giving us a ready and a fire signal right here. And so not a real strong signal. So we'll see if we get any type of movement to the upside on the VIX. So we'll be watching this here closely. But again, this could pull back here. It still has room to come down and stay down below the 17-18 line. So we'll see if we could get, that below that. That's really not my job, but you know what I mean. So with that being said, let's take a look at the S&Ps. The S&Ps are slightly up by about 0.25% here today. Again, long-term trend is very bullish. It is overextended here, but we between the 2 and 3 ATR, but this is not anything to be really concerned about because it has run up here for quite a bit. And but again, still due for a little bit of a pullback here. On the daily chart, it has been consolidating, rather range bound. It's not necessarily making any big moves one way or the other, but we'll just kind of see what we can pull out of this here today. I think it's just like the other markets. It's searching for a direction of where it's going to go. I think we will probably go a little higher today, but this is really teetering on the edge. So the S&Ps could go either way. So we'll see what happens when the cash session starts. Cash sessions can start and open up. So again, the current events of the job markets, the job numbers and last week numbers are real key to this here. And the other thing too is we can go in and take a look at our calendar and see what we've got coming up this week here. Tomorrow retail sales numbers are coming out, so that might show some strength in the retail side of things. And the 30-year bond auction is Thursday, and we've got nothing really major, but I think next the week of the 13th, I think there may be unemployment rate, on Monday the 13th. That might trigger something there if those numbers. And also, let's see what else we got coming up here. I know this week they also have the unemployment. A lot of people will be losing their unemployment for this week, unless something's done there. So we'll just kind of see what is going to be in store for some of those current events and things that are going to be happening. But it all affects us emotionally if we see the markets spike in a direction that's not in our favor. Let's take a look at the Qs. The Qs here, again, still extremely bullish, way overextended up around the 3 ATR. The Qs look to be pulling back a little bit, maybe seeing a little bit of rotation possibly. So we'll see how this moves here for us. On the daily chart, no different than the S&P and no different than the Dow. It is at a tight range, consolidating. We have set a pre-market intraday high, new high here today. Whether or not we'll be able to revisit that high here this morning after in the cash open is yet to be seen. Not going to, I know for myself, I'm not going to call this any one way or the other. So, but again, I think some of the drivers that's going to be driving this is we're going to be looking for, let's take a look at Tesla here this morning. We've got a position on Tesla. Tesla seems to be looking to be gapping up. We sold it. This is a credit spread. We sold a 660 strike. We are sitting really, really good on this. If we get a pullback back into these levels here, we would be looking at probably adding to this position or adding a debit spread. I think Tesla might be poised for a run higher. And so we'll see what we can get out of that. The other thing is, let's take a look at Amazon. Amazon looks to be maybe a bit, maybe opening just a bit lower here. We took Amazon down here, rode this all the way up here until we hit our target here. We didn't necessarily time the high. We saw it hit the target, pulled back just a bit, and we got out because everything was indicating that probably was going to see a pullback. This is still setting up. It's looking good. We want to see this on the daily chart come back to the mean here to the 21. So I'd like to see this kind of come back, through this week here, and then we would definitely be looking to pick up some Amazon. But in order for the Qs to get moving, this will be an important one here. Let's take a look at Google. It's Google, and so Google's going to be an important driver here to the S&Ps and the Qs. Right now looks to be, based on the numbers, could go any direction here this morning. So, but Google's is again highly overextended and on the long-term chart, but extremely strong, very, very bullish. That on the daily chart, we've got a little bit of a pullback going here on the daily chart. So may be looking for a bounce here. If it doesn't happen today, maybe tomorrow. We have Apple, and take a look at Apple. Apple has been kind of riding higher here. And again, on the weekly chart, we had new high last week, and looks to be holding that here this morning, and is poised to maybe make a move higher at the open. So this is setting up really good. Apple has been very strong. It's held this level, had a rough time getting over 150 and holding, but it looks to be that we're holding that 151, 152. And so I would, we'll be definitely watching this here today for any type of pullback on this. But again, it's between it's up here around 2 ATR in a daily chart. So it is overextended. So but I'd like to see a pullback back here to the mean, to the 21. We would definitely be a buyer. Won't see that today, but I think the mean when the mean here comes up, the 21 comes above the 150, then this would be a great zone here to hop in on some Apple. And again, so these are some of the things I'm looking at. Current events and things that are going on in the world, especially with the inflation, the bond rate, things like that. So, those current events are going to kind of dictate, I think, the direction of how this is going to go. But how I handle this, the emotional part of this is, I look at my technicals, I look at things, and I look for the setups, the high probability setups. So as long as the trade, the reason for getting into the trade was valid at the time that I got in, regardless of what the fundamentals or regardless of what catalyst is happening right now, current event in the world, as long as that trade is still valid, I stay in the trade until the trade no longer is valid. In other words, it breaks a level of support, it breaks a level of if it breaks to 21 or has traveled more than one ATR in the opposite direction that I'm wanting it to go, then that's going to be where we're going to make a decision whether or not we stay in the trade or we get out of the trade. So with that being said, guys, that is our pre-market prep. So don't let the current events of the world, don't let the current events affect you emotionally, in that it is a difficult game, and it's a delicate balance when you're trading, because your emotions will take your money away, and the markets know that, and the algorithms know that. So they trigger people's, the market's constantly looking for liquidity. And so if it can find it below a level of support, it's going to pick it up. And that's my belief on that. And so if you, depending on where you're at on the position, you might become subject to that drop in the market, and emotionally may get out before your trade plan says to. So with that being said, you guys have a great Tuesday. Happy trading today. And make sure you click the like button, subscribe, and we will catch you guys tomorrow.